So for the last video, something that I think you guys should remember is that you should remember the statements that I have here in green. They're pretty much the most important statements of the last video. With these statements, you could probably be able to deduce like the red statement and the teal statements, and you should be able to get through uh, the questions on the related questions on the exam if you remember the statements in the green. And back to today's video. Today's video, it's just gonna be a short video on limits to growth and investment. Pretty much what limits growth is loss in resources and coordination problem, and that's pretty intuitive. Let's say that we have more labor. We increase labor, then there's more people, and we have to coordinate those people. So there could be coordination problems. And let's say that for loss of resource that we increased our physical capital, like we increased our machine, and if one of those machines rusted and it breaks, then that's a loss of resource, and that's a limit to growth. And today for investment pretty much leads to a rise in capital, human capital or physical capital, and it might lead to better technology. So essentially what investment does is that eventually, if the investment is good investment, it will lead to a aggregate supply to move right, or a long run aggregate supply to move right. So essentially it will make everything cheaper and better. And one last note I want to make is that investment can lead to higher factors and better technology. Moving AS right and LRAS right, giving economy long run growth after long run. So that's pretty much this video. So pretty much this this cayenne part, this cayenne colored statement sums up investment in a jiffy. Pretty much, if investment goes up, then that could lead to higher factors and better technology, and higher factors and better technology obviously moves aggregate supply right, and might move the long run aggregate supply right, giving economy long run growth after the long run. So pretty much during the long run, you're investing money, or maybe even before the long run, you're investing money, and then the economy will go through its long run growth, but the investment can turn out to be so good that it leads to higher factors and better technology, moving the aggregate supply right and long run aggregate supply right, even after the long run changes. And this is pretty much the end of this video. Please rate, comment, and subscribe. In the next video, we'll go through trade again. Thanks.